Hey guys, Mike here. So about what a day in the market, and boy, you can tell it was green because the market loves when Jerome Powell and his little cronies throw them a bone. Okay, remember the market's an addict, needs a fix. What's its fix? Any form of liquidity, anything it deems as any form of liquidity. And if you don't, and if you're a member, you know this already. If not, you'll be surprised about what I'm about to say. But I told you guys to watch out for this for months, and it was that balance sheet roll off. Okay. If you don't follow a guy named Nicky Tamaros, I've talked about him for 4 years now. You know, he is where he writes for the Wall Street Journal, he covers the Fed and all that good stuff. And he is who the Fed uses to leak stuff to the public in the market so they don't surprise anybody. And so this morning he came out, put it in the Northern News Brief saying that they're going to make changes to the balance sheet roll-off. They may even pause it, right? So what does that mean? They've now taken it and they've moved it down to where they're only rolling about $5 billion in treasuries and bonds off the balance sheet. That's quite a big drop. Remember what happened last June? I told you when they dropped it by 50%, the market loved it, right? Went up immediately after that, okay? Because it's less bonds and treasuries going off, 10-year drops, as we'll get to see right here. They kept the mortgage-backed securities the same, but it just puts less stress out there. And because remember, they're rolling these bonds and treasuries off and just not replacing them. So now they're going to do less now. And so the market's like, this is great. Now we'll go over what else they did. Of course, there's certain things they did like change GDP forecast, unemployment, the rate cuts and stuff like that. And then I'm also going to show you 3 moments, because if you were playing a drinking game today and you just said, I'm going to take a shot every time he says the word uncertainty, then oh boy, you would have been on the floor passed out. You wouldn't even be here watching this video. You'd still be in bed right now and for the next like 12 hours. Okay, you'd have a big hangover tomorrow because he said it a lot. But I'll show you the 3 clips I think are most important from him. And then, of course, we'll go into how the market reacted. Like, what's happened, right? What happened to the VIX? What happened to the 10-year yield? Did the VIX break a certain level, which is going to be key to see if we can stay below and finally start moving down even more? But when you look at this right here, you can see kept the rates the same. Still got 2 rate cuts in, so 3.75 to 4. GDP down from 2.1 to 1.7. Unemployment up from 4.3 to 4.4. But as you can see, not a lot of big changes here, okay? And it was hilarious when one of the reporters said, if you think that the inflation data is basically stalled out now because of like tariffs and uncertainty and everything in the economic policy, why do you have 2 rate cuts still in there? And you know what his response was? What would you put in there? Like, we already had 2, so we just kept it because we have no clue. Because why? April 2nd is rolling around. What happens if all those reciprocal tariffs actually take place? What do you think is going to happen? I don't think the market's going to react positively or anything. And so they don't know. But also what happens if all those countries come to the table and say, okay, we'll lower our tariffs if you don't put yours on, and we just go forward and that's it. The market's going to freaking love it, right? So they don't know. They have no clue. And he's asked about inflation and tariffs, right? Which is one of these we're going to go into. The uncertainty the tariffs create, and is it baked into their data? Okay, so let me show you 3 quick clips here that I think are 3 of the most important to take away from this, unless you want to go watch that hour-long thing he does. But here you go.
Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity.
How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariffs? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those. And so that's kind of baked into the numbers. What happens, it will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
And of course, the White House got exactly what they wanted, which is why they're super quiet right now. The 10-year fell off a cliff. I can promise you this, there is a reason you have not seen Trump on social media trashing Jerome Powell like he did in 2018. There's a reason for this. They've been talking, okay? And I even heard Jerome Powell at a conference say this. I'm pretty sure he said something like this, but they've been talking to each other. And I'm pretty sure the deal is, I won't run you through the coals or run you over rakes and stuff in social media if you just help me get this 10-year down. And I'm sure Jerome Powell said, we got tools that can do that. No problem, right? I think that's kind of the deal that's been made, because you hadn't seen it, have you? I mean, now like 2018 was brutal, all right, for him. And so I think that's kind of where they're at now. And I'm sure Jerome said, look, I can't cut rates when unemployment is like this and blah, 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 but I can help you get the 10-year down. We can work with this balance sheet a little bit, right? And so we're going to see if that continues or not. And you see the VIX, we were waiting on this, right? That 20 handle we were looking at, and it dropped below it, came back up, tried to retest again. So we're going to see if this is going to hold, right? But if it does, hopefully, if you're looking at a sustained rally, we need this to continue to drop. And usually get below 20 over the last probably, 12 months. This is what's happened. So we'll see if this is going to maintain. Again, I can't control anything coming out of the White House, or that's going to shake the market or anything out of Russia and Ukraine. But that's what we're looking at, okay? Now, everybody keeps saying, well, is this going to be a sustained rally? Here's what you got to look for, guys. It literally, don't overcomplicate things. Just look for these 200 moving average retests, okay? RSP closed above the 200-day today. QQEW hadn't even got up there yet. A lot of stocks hadn't got up there yet. IWM's way away, even though it's just a mess, but it loves that 10-year being down. So it's starting to breathe a little life in there, right? And then we're looking for this, the SPX, to basically get above the gamma flip, go in positive gamma territory, and get above that 200. And sometimes they'll go above 200. You just need to see if it's going to hold. Okay, and that trend line is also going to be resistance. So this is what we're looking for, right? NVIDIA, you can see on the lower time frames, higher lows, higher highs. Higher time frames, lower lows, lower highs, right? But in the smaller time frame, it's trying to build out here. As it moves up, those fibs are going to be resistance. It hadn't even got to the 200 yet. So that shaded box area between like 127, 129, somewhere I believe it is, that's an area, if we get there, to look to see if there's going to be a rejection, and they're going to start shorting again. That's when we're going to find out, really. Tesla, big day today on an upgrade. And again, it's tested this area twice now. So it has held that 114, 120 area and bounced each time. Okay, but again, here's Amazon, multiple rejections on 200, trend line of death right there. A lot of stocks, they continue to move, we're going to see breaking above this. And then the 200 is right there. It's very close for Amazon. So it'll be one of the first to actually test this, like AMD. This is the trend line of death, as you can see, and it's starting to break above this. It's starting to move up, right? And this, this point, they call it the, advanced money destroyer for a reason, but it's been moving up, okay? And these fibs, it's above the 0.5 fib where I drew this from, but you're going to see that's going to start being resistance as well. It's going to start running the fair value gaps, all that fun stuff. 116 will be brutal somewhere in the area if it even gets there, because that's where the 200 week is as well, and resistance. And so it's got a lot of work to do. But even NEO, once it broke the 3-year trend line, again, they have earnings Fridays. They could totally dump, and it's a piece of garbage company. But still, even it's breaking above that trend line. When it does, they tend to try to go up, right? Because that was major resistance. Again, this one has earnings Friday. But now, Microsoft, look at this one. It's trying to break above that trend line of death right there and move up, right? And so we'll see, because, if it gets to like 412, 414 up there, that should definitely be resistance for it if it gets there, okay? But again, if these start participating, because these are what's been sold off and sold off and sold off, then the market will go higher. It needs, for a real push, it needs these stocks, okay? And there's, again, Microsoft. We'll go to Google. Google's another one, for example. You can see it's right here, breaking above that trend line, which was support, now resistance. It's got a ways to go to get to that 200. It's got to get all the way up to like 175, I believe it is. And so it's got a gap right there at 170 will be the first target on that one. But this is what we're looking at, right? This is what we're looking at. You saw last week some areas bottoming, moving up, right? Trying to help the market form, whether it's a temporary bottom, permanent bottom. By the way, here's another trend line of death for you. If you can get above that, that's bullish as well. And so, that's what we're looking for, okay? So you start to form this bottom out right here. And again, like I said yesterday, we've been so, just trained for these V-shaped recoveries because we had so many, as I showed you yesterday. And so this don't have to be a V-shaped recovery. And so that's, I keep getting this question all the time, like, oh, is this it? Well, we're going to find out, right? Again, even Jerome Powell's telling you, we're lost. There's a lot of uncertainty. A lot of things we just don't know. Meta tested this 200 today. It's the only Mag 7, Mag 8, didn't get below it, and it bounced. Some people are looking at the 300 EMA, I believe it is, but I'm just looking at the 200, and it got a bounce there, okay? Now, looking at something else needs to happen. Got to have CTA positioning, right? Remember I told you these guys are hecka short, right? They're trend followers, right? These are the commodity trade advisory guys that manage billions. And so if this turns around and starts to move back up, that means they're covering their shorts, okay? So that is a good thing. And they think the trend is going to go up. You can see this in the chart they have here. So that's a couple things I'm going to be watching for, okay? Now, looking at earnings tomorrow. Again, you got a few, Academy, Jabil, I think it's PDD. Darden Restaurants is going to be a big one. Like, to see what they forecast, see what they see out there. Micron's a big one. Nike, of course. FedEx. Obviously, transportation stocks have been disastrous. Lennar Home Builders, that's going to be another big one. And then, of course, we have unemployment claims in the morning. And then some other stuff like Philly Fed manufacturing data, existing home sales, CB leading index month over month, and maybe natural gas if you want to look at that. But again, guys, this is level by level. That's all you're looking at. 5-day moving average is curling up. Check. VIX is falling. Check. Where's the 200 at? That's what we're looking at all of these. Okay, if we get up there and we get a solid slap down, probably not good, right? Not the end of the world, okay? But you're just looking on those 1, 2, 4 hour time frames to see higher lows and higher highs getting set and breaking through levels, okay? And breaking through those major moving averages. And what's going to make that happen? Mag 7, and when I say Mag 8, by the way, that's Avgo. Okay, they're like I think it's the 10th highest rated stock, or the 9th highest rated stock in the SPY behind Berkshire Hathaway, if you want to include that one. But, that's what you're going to look for. And if they move above the 200, do they start testing it and moving higher? Like, that's just the key here. All right, and again, are we in bullish, territory as far as seasonality? Yeah, we are. But again, April 2nd is right on the corner. Nobody knows. So, it could be a 2-week rally, and then all of a sudden, if reciprocal tariffs actually kick in and things really flare up, I don't know. I mean, it doesn't seem like the market would go, this is great, having all these huge reciprocal tariffs all around the globe, and then they might retaliate. Who knows? And that's what Jerome Powell was talking about today. They just don't know, okay? And it's going to be a minute before they have another meeting. So, again, that's a whole different story. So that's what we're looking at. And if we do continue to move up, enjoy the green, right? That's the way to look at it, right? But just level by level, no panic on any red. I wouldn't get too overjoyed by the green unless you just feel so beaten down. I can understand that, but that's where we're at. So keep it simple, all right? Now, I appreciate all you guys who watch the videos. And while I'm thinking about it, feel free to put any questions for Saturday's video in there, and I'll start working on those as well. Think about hitting that like, subscribe button. Don't even think about it. Just do it, please. I appreciate that. Think about signing up for the membership and less than McDonald's combo. I'm never anything I can do for you. That's everything you get with it. And I will see you guys tomorrow for another fun one.